Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 4-hour chart of US government bond 10 years. And as you can see that after the market opening, okay, there has not been much change on the chart. Market is more or less silent. So nothing much to discuss from the US bond chart. Let's have a look at a chart of DXY. So DXY is going up. Okay, DXY is going up, and right now we are seeing some sort of retracement on the chart of DXY. But overall, after making this high, DXY has shown a good amount of recovery. If you look at a chart now, the DXY is standing at 111.28. So if we draw a Fibonacci here, then this is the first support for DXY and this is the second support for DXY. So if DXY bounces from the first support again, first support of Fibonacci 23.6%, then again we will get the confirmation that okay, the uptrend on DXY is continuing. The level is around 111.15. Whereas the second support is around 110.85. This is the first support and this is the second support for DXY. So if DXY bounces from any of these supports, then we will see further reaction on the chart of gold. Right now, if you look at the chart of gold, then you will see a green candle because we are seeing a red candle on the chart of DXY. So therefore, keep your one eye on DXY because the bond chart is not telling much from the last couple of days. Now let's have a look at the chart of gold. Hopefully you all made good profit yesterday because as per our expectation, market broke the support level and we saw a good amount of movement on the chart of gold. Right now market is trying to recover, market is showing green candles, but we still cannot deny the fact that sellers are dominating the market right now. It really makes me very happy when I receive your happy messages, emails. Okay, thanks a lot for all the love. If you look at the chart of gold, then the overall big levels that we have been discussing for the last couple of days are still intact. 1720.28, 1702.05, 1680.86, where these levels are standing at the top, and we don't need to discuss about them again and again because right now gold is standing here, so don't need to waste time, isn't it? So if the downside continues, let's say by European session or US session, if we see a red candle here again, if we see further downside on the chart of gold, then you can take a sell position below 1629. So if market drops below 1629 level, you can go for a sell position if the sell is good enough. What should be a target? At first you should be looking for a target of 40 pips. 40 pips should be your first target. If you see the market continuing the downtrend, then you can continue with the sell position and your next target or ultimate target will be 1620 because around 1620 we have the next support for gold. 1620 to 1617, this is the next support zone for gold. If market comes down to this support zone and if market bounces, you can expect a buy position, you can look for a buy position. I'm not sure about any trend reversal as of now, but at least you can expect 60-70 pips from the from the support level. But keep in mind, you should only take a buy position if market bounces. If you see the market has approached the support with this kind of a candle, then obviously you should be avoiding any buy position. After all, never ever gamble with your hard-earned money. No level is permanent in the market, so you should trade when the opportunity is right. And if market goes up from the current market position, as you can see, the right now market is showing a quite a healthy green candle. So if market goes up from here, okay, so your next trading opportunity will be around 1648 to 1650. This is your next trading opportunity. Why? Let me show you. To understand 1648 to 50, we need to go to the 1 hour time frame. Is the 1 hour chart of gold here. We are using Fibonacci. As you can see, the market has already approached the Fibonacci 23.6% retracement level, but in comparison, okay, 23.6% is not a very reliable level. Okay, so as a result, okay, I think 1648 to 1650 is a better trading position for us. Why? Let me show you. Because see, first of all, we have Fibonacci 38.2% retracement level here. Then we also have the 200 moving average, the red line. And thirdly, you can see market has bounced from this level previously around 1650. So previous support may act as resistance. So Fibonacci 38.2%, 200 moving average plus previous support acting as resistance. We have got three factors around 1648 to 50 that are telling us that yes, there is a high chance that if market goes up, market may reverse from here. So if market approaches this level, okay, if market reaches this level, observe the market and see how the market reacts. If according to expectation, if you see the market is struggling to go up, market is facing price rejection from above, you can definitely go for a sell position. Right now, market may also face some selling pressure around this level as well, 1641.42. So 1641.42 is also a minor level. Okay, I'll consider this is a minor level. Okay, so as you can see that right now there is not much volatility. Okay, so if market reverses now, okay, then you can expect the market to reverse. Okay, but to be honest, in this market scenario, okay, when we do not have any clarity, a clear picture about the direction of the market, okay, then I prefer to take position, okay, on Fibonacci 38.2, Fibonacci 50%, or Fibonacci 61.8% retracement levels only. You can look for Fibonacci 23.6% in case of a trending market. For example, USD JPY, it was a clean trending market, so you can go for a buy at dip. Okay, but when it comes to gold, okay, and this kind of a choppy chart, okay, I personally prefer to avoid taking position in a market levels like this. Okay, so if you want to take a position, that's your personal call. Okay, I will not comment on that. Okay, but personally I think that if market goes up, market has a high chance of reversing from this level here. Okay, anyways, this is my analysis. I can be wrong as well, so please follow proper risk management. Do not gamble with your hard-earned money. Protect your capital. Bye bye, take care.